Look, thank you all for coming out. For those of you who don't know who we are, we're Barton Gold. We are focused in the center of South Australia, so the central Gawler Creighton. And I'll walk you through our story here a little bit and why we think it's a bit of a unique opportunity in the market. Before we get into the presentation, that picture is not a stock image. That's actually a shallow, high-grade open pit that we have, so that plays into some of our strategies. But touching upon who we are again, big picture, who are we, what do we do, why do we care, why do we think it's important? We are a pure play gold, pure play South Australian developer. So we have gone into central South Australia, the very center of the Gawler Creighton, and we have consolidated pretty much every significant historical producing and exploration asset in a 130-year-old gold district. So we are focused on not rushing these assets back into operations necessarily. Of course, we have that objective. We do have the only gold mill in the region, but what we're doing is actually bringing a lot of technical work in to rebuild much bigger, more contemporary regional geological models. And we're systematically working through that because we think there is a considerable multi-million ounce potential here, and we want to build a really material platform to be a really significant gold producer and really lead this region back into development and really redevelop South Australia's primary gold industry. So we currently have about 5,000 square kilometers of tenements. On that, we have built about a 1.3 million ounce resource base. We have ownership of the region's only gold mill. We have a very strong management team. We have very strong alignment with our shareholders. And we have an unusual advantage in that we have assets that we can monetize. So we have about $10 million in cash and about $4 million worth of gold in concentrates presently. So to look at our capital structure, we are valued at around $45 million today in terms of our market capitalization, about $10 million in cash, $4 million in gold and concentrates. So an enterprise value, if you will, around that sort of $30 million Australian mark. And we have just recently listed on the OTCQB as well as the Frankfurt Stock Exchange as well, following a lot of engagement in North America and Europe. So we've built a very accessible share capital structure. And we've also had a number of institutional groups join us quite recently after our recent resources update. So we importantly have a very strong alignment with shareholders. So board and management speak for about 23% of the company. Board, management, and institutions are about 40%, and then the balance of that wheel is about 60% of sort of high net wealth and retail. So a good cross-section of shareholders, a lot of support, and really important, what we focus on and have always focused on is having a really, really good team. So we have built a team that has well over 200 years of experience exploring for, permitting, building, financing, operating, and optimizing resources assets, with a particularly strong pedigree in South Australia and gold. So the sharp-eyed observer will note that pretty much half of my senior leadership team is ex-Normandy and Newmont. Everybody is based in Adelaide. We are very much on the ground. We are part of the fabric, not only of the city, but also the region in which we work. And we are all pulling in the same direction with a very clear ambition, and that ambition is to develop South Australia's largest independent gold producer. So the majority of gold in South Australia is produced as a byproduct of copper. Quite ironically, South Australia only speaks for between 2 to 3% of Australian gold production, even though it has 25% of Australian gold resources. So we want to turn that around. And what we're looking at doing here is rationalizing this ground. So we own a mill, and where we're really focused with our projects are our Tarcoola and our Tunkillia project. We are focused on scale, and we are focused on open pitable mineralization, for the simple reason that open pit mineralization is easier, faster, cheaper, and safer to explore for, develop, and operate. So we can target efficiencies of scale in an open pit in a way that you cannot in an underground environment. So that's kind of where we like to play. So we are focused on Tarcoola and Tunkillia. On these two projects, we have about 3,000 square kilometers of ground. We have about 100 kilometers of major structure, some of which are the first to be modeled by us. And on about 2% of those structures, we have well over 1 million ounces of gold. So we really think that these two assets have quite a bit of potential. And the opportunity that we have is to actually break those assets apart in a sense. We will develop them together, The idea is we'll have them operating in tandem. They're two projects 70 kilometers apart. They are functionally satellites to one another in a modern contextual setting. But when we think about it, we have the unique opportunity to separate them. And so we look at Tunkillia, which is a very broad baseload mineralization, essentially as an expansion project. And we look at it that way because we see our Tarcoola project as an opportunity to start smaller, higher grade operations using an existing plant, fully permitted mining leases, proven logistics, proven metallurgy, and actually get going in operations that are smaller scale to generate cash flow from a mill that we already have, and then expand into a larger scale operation. So something that might look like a transition from 0 to 40 or 50,000 ounces per annum, and then from 50 to say 150,000 ounces per annum. That's the way that we see moving from 0 today to 150 in the future, with a much lower risk, much lower cost, and therefore much lower dilution model for shareholders. What we have been doing in the past 2.5 years since we've listed is a lot of drilling, a lot of exploring, a lot of thinking. We brought a lot of new technology into the region to kind of unlock the mysteries of the earth in a way that's expedited compared to what was available in the 80s and the 90s when there was a lot of interest in this area. We have had a lot of success not only in unlocking value from our existing assets, but then adding to those. So we have found 4 new gold zones. We've essentially doubled our known gold mineralized strike. South Australian government is a very strong co-sponsor of our work. They've given us almost $1 million in grants. In April of this year, we increased our Tunkillia resource to 1.15 million ounces, which took us to our total of about 1.3 million ounces. In the time since we've been public, we've generated about $5.2 million in net additional non-dilutive cash. We rent out our camps, we dispose of stuff we don't need, and we process and sell gold. We currently hold $4.1 million worth of gold and concentrates and are looking at actually processing some of our other remaining stockpiles next year before we actually go into regular mining operations. So this is about steady steps, left foot, right foot on the path to success, and steadily de-risking on the way to an achievable outcome. When we look at the assets, we'll start at Tarcoola. This is what we're saying is our potential stage 1 opportunity. This is actually the home of not only South Australian gold, but South Australian high-grade gold. So Tarcoola was the home of the 1893 gold rush in South Australia, pretty much the same time as West Australia. And what happened was on our mining lease, there were about 600 shallow, high-grade workings scratched out of the ground, where you quite literally have quartz structures coming to surface, and the old-timers, as if you will, were there with picks and shovels and bits of explosives and basically mining by hand at about 1 ounce per ton. So an average grade of around 37.5 gram per ton. And you fast forward 100 years later and a mining lease was put in place. And this mining lease was basically designed to just dig a hole around one of these historical high-grade shafts. So that's the Perseverance mine. And during 2018, that mine was shipping 3.8 gram per ton ore from a 70-meter deep pit to our Central Gawler mill and recovering with about 93 to 94% recovery. So it's very attractive mineralization on a fully permitted mining lease. And what we are doing now is building a picture of these subsurface structures to go through and hopefully replicate a number of repeats of the mineralization that's hosted in that pit. When we look at the pit itself, the pit, as I mentioned, is quite shallow. So it's about 30 meters deep in the north. It's about 70 meters deep in the south at its deepest point. That was the pit that you saw on the cover of the presentation. So you were looking from north to south. So very small, very competent, very clean, very easy to mine. And again, it was historically dug out in a way that we might think of as mining a soup bowl. There was a known body of mineralization, and the strategy was dig out the soup bowl and don't look underneath it and don't look behind the rim. So we've drilled beneath the pit. Unsurprisingly, the mineralization extends below the pit floor. So we've extended mineralization. We found mineralization as far as 200 meters below the pit floor. We have also identified a new gold zone sitting right behind the southern pit wall. We've called that Perseverance West. It's very creative. But what you can see is there are a number of shallow, high-grade intercepts that have meaningful thicknesses, 3, 4, 5, 6, 7, 8 meters, ranging from 20 to 40 gram per ton. And this sits right behind the pit wall. So that's an opportunity to essentially look at this pit potentially as sort of stage 1, year 1. So that's very exciting, but if you zoom out a little bit, we see the bigger picture really kind of is the bigger picture. So the image you see on the left is a mag image of the mining lease itself. And we think we've identified several locations where we're likely to have a repeat of the structure as sort of structural and chemical circumstances that created that high-grade pit. So we have brought in a lot of new surveys. We've already mapped that with a couple of different technologies. We have just done a seismic survey across the mining lease and then across also the next 10 kilometers to the west. And that is to get a sharper understanding of what you see on the right side of the screen. On the right side of the screen is an interpreted 3D image, interpreted from seismic processing done by HiSeis in 2020. What this shows you is a couple of kind of simple things and then a bunch of complicated things. We'll start with the simple things. In big, bold blue, we've highlighted there the Perseverance Fault. So this is the main structure that sent fluid and mineralization up to that shallow, high-grade pit. And that's circled in blue on the surface there, and that sort of intersects right in the middle of that mining lease where we think there's likely to be potentially repeats of this mineralization. But as you look across the next 10 kilometers to the west, we have identified a series of faults and sort of analogous structures that look identical to the Perseverance Fault. What do I mean by that? I mean they pass through the same formation, the same mineralizing basin, which is the Tarcoola Formation, and they plug into the same intrusive bodies that brought heat, pressure, and fluids up through that Perseverance Fault and deposited high-grade gold in the Perseverance mine. At the very western end of this target area, we have a target labeled there called Warburton. In 1997, AngloGold drilled a hole there. They drilled this based on a geochemical anomaly on surface, and they drilled 16 meters at 3.5 grams per ton from surface. So today, we'd get really excited about that. In 1997, with the gold price falling through $300 US, nobody was very excited about anything, and nobody followed up. They also did not know about the structural orientation of what they had drilled into. So it's very hard to follow up. It's really bad to have success. You don't understand why you got it. So we have just redone a seismic program focused on the 0 to 500 meter depth here. We are going to sharpen up that resolution of where and how exactly we think those structures come to surface. And then we're going to start going through those with diamond and RC drills and hitting those and converting those into new mineralization and hopefully creating essentially a cluster of high-grade open pits that can both act as a sort of stage 1 high-grade feed to our mill, but then also act as high-grade blending feed to our Tunkillia project. So Tunkillia is 70 kilometers to the south. This is very different geology. This is broad, kilometers-wide, shear-hosted mineralization. We have a project here that we acquired as a 558,000-ounce resource 3 years ago. At the end of 2020, we grew it to 965,000 ounces. In April this year, we grew it to 1.15 million ounces. So we've grown that twice. We believe it's got a lot more growth potential in that deposit as well, but also the 3 new gold zones right around it that we've confirmed using a combination of old data and new geophysical modeling. So we are going to be following that up. We've just announced this morning that a drill rig is due to arrive at site today or tomorrow. We're going to be drilling the northern and southern extensions of the 223 deposit, and then that rig is also going to go on along with a diamond rig to go through those 3 zones and see if we can't also convert those into JORC resources. When we look at the 223 deposit, some interesting geometry comes out of this. So not only is this long, broad, and consistent open pitable mineralization, but we actually have a high-grade core. So we have about a 300-meter long zone of mineralization that has, at its center, about 80 to 100 meters of mining width, and some blocks in our block model grade up to 5 to 10 grams per ton. So we can start on a high-grade open pit. We have a supergene zone, which is that light blue thing you can see on the left side of your screen. As you open the pit to the north and to the south to get ready for big bulk open pit operations, that pays for that to be opened. And then you're doing 5 million ton per annum and 2.5 meter mining flitches and mining 150,000 ounces per annum. And we think that that is kind of the start for that shear. We're really just right in the northwest corner of that shear. The same model that we've built, which has correctly predicted the existence and orientation of these repeats of this mineralization, are predicting that we will find the same thing just down the shear, so we'll be testing some of that later this year as well. So there's a lot coming up. As I mentioned, we'll be drilling Tarcoola, we'll be drilling Tunkillia. We have already had a resource update this year. We did an institutional placement that saw 6 new funds come into our company in June and July. We've sold some gold this year. We are looking forward to putting out resource updates, hopefully multiple updates before March, and selling some gold. And for those of you who haven't yet entered this, I mentioned we updated our resources. We expect to update them. For a bit of fun, we've got a little survey. You can scan one of these cards. They're out in the lobby, and I'll leave this one here. If you can sort of guess what you think our resources will be at the beginning of March, the closest to the pin gets 10 grams of gold, actually mined from our mines by me with bloody hands and jackhammer. So it's a bit of fun. It's processed for us by ABC Bullion, and it's actually in granule form. So you can have it made into a bracelet. You can have it made into rings. You can also just keep it for a bit of fun. But always happy to answer questions. Thank you very much for coming out.